The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. This is the Monday edition, the 14th of April. And my pleasure to be here Monday through Friday, 11 o'clock till noon. It turns out I will also be here for the next hour to sit in for Larry. And fascinating market, this. I get emails from people saying all the time it's been a real challenge. And I beg to differ. I think that this has been one of the most orderly markets that we've seen, both on the upside and the downside. Now, being able to trade it successfully, that's something a little bit different. And so you got to be able to separate in your mind when you have the Fed suddenly come in and shoot the market up 180, the Dow up 180 something points. That can make a difference, and that's what you have to be careful of. Now, even more important than that, what I'm looking for is in the overall. How can I put this? In the overall market scenario that I'm looking at right now, there was a technique that I spent a lot of time with my Master Trader Series attendees 2 Saturdays ago. I wrote it up for them. I discussed it, and it's a technique that I've used for quite some time. You know, here at TFNN, Larry, Tom, Steve, a number of people, technical analysts, use what they call a one-to-one expansion. Well, I've looked at that for a long time, and I've found that within the Chapman wave methodology, there's something that works at least better in the technique that I use, and that is a one-to-one. I call it the Chapman wave one-to-one extension. It goes in price, but it's more important because it includes time. Number one. Number two, it isn't vertical. It isn't in the sense that the price goes from 5 to 10, and then you can immediately extrapolate that data and say, oh, that's 5 points up for a one-to-one. No, it might go 5 to 10 in a diagonal move. All of these that I look at are diagonal moves, and those diagonal moves means that if you're able to do with the technique that you have, the software that you have, if you're able to use the same application of the angle, and that to me is absolutely imperative. 1845, I'm going to show you exactly what I'm talking about right now. 1830.75, let me just put that in, and we'll have something to talk about. 1830.75. One of the reasons why we went long this morning in two sectors, pretty beaten down sectors, is for that very reason that I'm looking at 1867.50. Let me show you what I mean. 1867. If you're looking at Tiger TV and you look at the E-minis, you could do it on the Dow. I'll do it on the Dow in a moment, but I'll show you in the E-minis because that's what we usually look at first thing. The E-min is up 1275 right now, but they had gone from 1892 in the last move to the downside. 1892 from the high of the, what date was that? The 4th of April, down to 1830.75. That was on the 8th. Go up for 2 sessions to a high of, I thought I just typed that, 1867.50. Let me put that, there it is, 1867.50. On the 10th, and then it comes down. So it took 1, 2, 3, 4 days, and then it took 2 days to make the low, and then 2 days to go higher, and then 3 days to make today's early morning low. And what was the morning low? 1803.25. Where was that? That was about 5 points below the one-to-one, 8B equals C to D in this particular method of time and price, and therefore it said that there was a really good chance. Let me go to the Dow to show what I show my subscribers every day. Here's the Dow. There it is. And that went from 1660 16,631 on the 4th of April, to the low of the 8th at 16,056. 2-day bounce to 16,438, so the A to B, and then C to D took it to the low of Friday, and that was at 16,015. And I had that down, I have it right here, I believe. Let me just show you. $INDU. No, I don't. All right, well, it goes like this. It goes like that from there to there. And then I click and I go parallel. And that's a diagonal parallel, new parallel. And what does that do? That takes us from right there to there. So it missed it because this one on the Dow would take you to 16,005, miss it by 10 points, big deal. So I'm anticipating that there's a rally. I'm anticipating that this is a rally that might garner some credibility because it's going to be a very light trading day. You've got Passover, and I wish the Jewish subscribers certainly a wonderful Passover. And for Easter, we've got Easter coming up Friday, Good Friday. We will not be here. So we're looking at this and saying light week it should be, and light week can allow for the seriousness of the decline to be alleviated by some kind of a rally. The rally has 16,249 in the Dow. I would say 16,220. We're at 16,137 now. Now I'm going to make it 16,190s to 16,249 as the upside, and then we might see an arch formation. I don't know yet. We go one step at a time. Nice action in the candle on the 120-minute chart. And let's just do them one at a time, and I'll give you all the numbers. Here we go. The Dow is up 110 at 16,001. I keep saying 18 because it gets a little far away. 16,138. The S&P is up 15 at 1830. The comp index is up 44. Nice move for a change at 4,043. You finally got the biotechs participating a little bit here. You got the Qs moving a little higher. That's good. You've got gold up 10 at 1329. Now, I find this very fascinating. Look at the gold holding so well. Gold stocks are not participating as well as they should. But gold has gone to that expected leg D that I was anticipating. It's actually leg E in the 120-minute chart, going right to the 200-period exponential moving average at 1331.40 was the high today, and that moving average is right at 1332. So it's right there. There should be a little bit of resistance, and I'm anticipating that the dollar finally gets a little bit of a bounce. The dollar is it's got a bounce already today. It's up 28 cents at 79.74. Now look at this. The euro, the TLT, the iShares 20-year Treasury Bond Fund ETF is making a potential peak D with a high of 110.79. We'll see. The day's young. Anything can happen. We've just barely begun the day, barely begun the week. And you've got the 120-minute chart at a G, potential G/B, and we'll see what happens here because the TLT is a little bit extended. USM 14 is the, come on, type in the right place. USM 14 is the Treasury bond. It is a peak D in the 120-minute chart, leg D in the daily chart, leg D in the weekly chart. I'm going to be watching this real closely. I just have the feeling that the selling in the stock market is a little overdone at this particular point, and that there should be a pretty darn good relief rally. And that relief rally could, in fact, surprise people. So let's do this. I want to finish up the euro just quickly. The euro is EUR/USD. It made a peak E top recently. It's struggling to get back there. It's making a kind of a cup formation, but it's really working hard to do anything. Right now, I think it's in the trading range with a limit of 1.395, and the support should be at 1.379-ish. Let's go to Marvin in Orlando. Marvin, how are you?
Hi, how are you? Thanks for taking my call.
My pleasure. How are you doing?
Good. I wanted to see if the IBB, how far it would run on this rally, you think?
Okay, the IBB right now is at 219.94, up 4.49. In the perspective of where it's come from, so far, even though the day is young, this is kind of just a tiny beginning of a move. We don't know yet whether it's going to have the veracity that I think it should. The MACD is flattening out. The stochastic still at 14%, hasn't yet crossed over to the 20% area, which is where you'll get probably a stronger rally. I suspect that the worst of the IBM sell-off just in this particular phase is pretty much done. Yes, we could go a tad lower than the low of 215.25. Let me just type that in. But 115.25. I would say that the 212 to 208 area, that's kind of what I'm anticipating will be hit, and that's going to be absolutely a clear level of support. But I think we bounce first. So your question is?
Oh, how high do you think the bounce is going to be?
Well, I'm going to go one step at a time. The wick of the candle of Friday, besides being a pretty darn ugly candle, with a high of 225.98 and a low of 215.25. I mean, it's almost 5% intraday move. I'm anticipating that we get into the body of the wick, not the body of the candle. We've already passed that, but into the middle part of the wick, which is at about 222.30. If at any point between Tuesday and Wednesday, the IBB is able to overcome the resistance there, then there's a really good chance that two things are going to happen. One is it will try to work its way to the high of 225.98, but the moment it gets above the 223 area, I'm suspecting that the 9-period exponential moving average of 226.39 is going to be reached. So it's one step at a time. If you look at the various, I had a quick glance at some, not all, just the sum of the biotechs this morning as the market was opening. You've got biotech IGEN, which is up 9.32, up 3.40% at 283.32. That has a resistance of 290.97. You've got Amgen trading right now. Let me just check here. I just want to get this in so that I don't miss it right there. That Amgen is not so great. It should be doing better. It's had a very severe fall from the 129s down to the low of 112, 111 area. So it's really struggling. You got Gilead. Gilead is up $1.33. That's nice, and that looks like it's getting closer at 67.38 to the 9 EMA. So I'm going through these one at a time, and the reason I'm going through them one at a time is that when they came down, some of them really tanked, and others, I wouldn't say that they held up very well, but they held up way better than the others. So if you want to give me just a moment, I'm going to do a couple over the break, and then I'll come back and I'll give you a little bit more of the specificity.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Marvin and Orlando. We're looking at the IBB. That's the NASDAQ ETF, the NASDAQ Biotechnology iShares ETF. And my suspicion is that it's going to have a little bit more of a rally, and that rally could give a nice percentage gain if one is in it. Got to be a little careful because one of the worst sectors, every rally in a bad sector gets beaten down real quickly, but I suspect that after about 20% decline, there should be at least a decent pop-up, and that's kind of what I'm anticipating, and my subscribers are anticipating. If you look at Regeneron, one of the fabulous stocks, making a potential peak F in the monthly. The monthly is not finished, so we can't talk about that yet. But certainly the weekly has made a peak F. That's not a C, that's an F with a very long candle, very long doji candle, long-legged doji candle, and it broke to the downside. At some point it could try to maybe try to get back into the wick, but I suspect that this is it needs a timeout. So if I look at the different aspects of it, and I went through different stocks during the break, Gilead, Celgene, Amgen, Biotech IDEC, Biogen IDEC. I'm looking at this and I'm saying, you know what? It's a little struggle right now because the selling's pervasive. My suspicion is the weekly chart is going to turn into the GE chart. The GE chart says, struggle for a couple of weeks. In fact, for half a year, most of the year in the weekly chart from breaking down under the up channel support. It's hugging that line. It looks very much like GE is going to break it, and I suspect that the IBB over a period of time is going to break that key inside track channel support, and that starts right where we are right now because it's a higher low than it was last week. Last week's low was, got to get used to this new thing, 215.25. So far, the low today is 215.60. So any close in the 214 says, whoa, be careful, because the moment IBB closes under 209, 208, it's broken that key support level that is held for over a year now. In fact, going back to November of 2012. So my answer to you is yes, I think there's going to be a bounce. Yes, I think the bounce will be a little bit surprising to the bears, because it would be obvious that they've been beaten down so much that anyone with any kind of a gain is going to try to get out, and anyone who's I spoke to someone over the weekend that said, oh man, I just got killed in the biotechs. I hadn't spoken to him for months. And so my suspicion is that rallies will be sold, but it could be a little bit of a surprise if there's a sudden rally that takes it over 222 and gets to the 26 area. Why? Because it could get into that very ugly candle of Thursday. If you thought Friday was bad, Thursday was a really ugly candle. And I'm not sure that this is a move that can take it above 235, 236, the resistance there. But if you're going from the 219 area we're at right now, Marvin, I think a nice bounce of, say, it's at 229. Let's just say it goes 6 to 8 points on the upside. That's a nice percentage, 3%, and I think that that's kind of what you can expect. So, yes, I think downside is limited right now, just a little further testing, but I suspect that the upside is going to garner some time and price in the daily chart. The big thing is, can the weekly, after such intense selling, hold the main support? The first support that we're looking at is right here at the low today, let's call it the 215s. And can it get into the open of the candle of last week, which opened at 224.83? And my answer is, I think yes. But the day is young, and we'll see if I'm right or wrong. I hope that helps you. So that's Marvin in Orlando looking at IBB, and so I just want to elaborate a little bit more on it. The candle that's forming now, it's just, 2 hours into the day, you can't really tell very much, other than it's above the low of Friday, and that's important. Okay, now, a couple of things I wanted to do. I wanted to go through, I had promised, there it is, okay. The Investors Business Daily, I had a question from someone, and now I'm just swinging around trying to find where I put it. Oh, man. All right, I'll have to find it again. Give me a moment, and I will try to find it. I'm going to go to it right now. So the investors, what's really important about the IBB, about the Investors Business Daily, you got Thursday night, you've got Bill O'Neill is coming up with Tom O'Brien, and they're going to be discussing, I guess, the market and different aspects. Most importantly, what I'm looking at here is we've got a break coming up. I will find it and get it all. I'll get it up and running. I'll be right back. And I wanted to go through some of those
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman here, Tiger Technicians Hour. Just got a quick question, email question. Bought the basket of FEYE, SPLK, and WDAY on Friday, and I do not want to give up these gains. My plan was just to sell on the pop. So it's a pop, great pop. You got exactly what you were looking for. The FEYE Fire Eye Inc. is up $2.72 at 50.50. I'm going to make the suggestion, since that was your plan, I'm going to suggest that you sell half of each, but let me just finish going through them. But the other half, because I suspect that this is a rally that's going to have more than one day to it, I'm suspecting that, in fact, you either raise the stop on half to quite tight so that there's a good chance that it gets taken out, but if it doesn't, it's fantastic. But if you get taken out and workday up 3.31 at 75.17, hey, good eye, really good eye, and you had the courage to do that. I thought that the workday was not quite ready, but it looks like it might be ready for the pop-up. And SPLK was the one I believe that I was looking at and thinking that that was the most ready, and it is. It's up 6.92% at 61.69. Here's my thinking. That was your plan. So to reward yourself, take off at least half of each. That was your plan. You know, I don't see any reason why you shouldn't. Because 2 out of the 3 are acting really well at this particular point, and I'm suspecting that this is not a one-day pop-up. We've had those. We've been beaten down. I mean, this market has just been, it's relentless. Friday was just, I can imagine how disappointing it was for the bulls who remained in, saying, you know, just another day, it should be over, and then 100 and over, a big triple-digit down day. I'm suspecting that this is going to go a little further, and that spunk could in fact go from 61.61 to the 63.40 area, the 9-period expansion moving average. Even the 67 is possible if this rally goes into Wednesday or even Thursday morning. So take something off. It doesn't have to be off. I would reward yourself by taking off in each one because that was your plan. But then you've got to have a tight stop. If you don't, get a very tight stop. So it's almost the same taking it off, because if there's a pullback today, be taken out of some part of your position. The rest, I'm saying hold it, because I think that your plan is to go into the most, I would call these the very high beta stocks, and those are the ones that bounce in a situation like that. So I'm going to go through some of the IBD stocks in a moment. On my right, I've got them all written down. I went to the site. I actually prefer the paper edition, although I always have the electronic edition. It's just the old-fashioned me. I just read it better. I don't know what it is. So that's my thinking. In Workday, I'm suspecting that if it can hold above 75.10 to 74.90 today, and tomorrow could be a nice day as well in the market, this thing should, in fact, get into the ugly candle on the 120-minute chart of Friday. And that takes it to a low of 76.76, which is a point and a quarter above here. So that's my thinking. Stick to your plan. You don't have to get out of everything, but if you don't get out of everything, you've got to have very tight stops. Don't give back too much of any reversal later today or tomorrow. And congratulations on sticking to your plan. Now let's go to what I'm looking at here. You've got a bunch of stocks. You've got THRM. That's new to me. Gentherm. For some reason, I just never ever picked up on that. I don't think I ever had until this weekend. Notated it. Leg D, big doji candle, Gentherm, climate controls for autos and trucks. It's a great industry, but you need to be selling cars to be able to keep that up. So this is the leg D in the weekly, great technicals. The monthly. In the weekly chart, holding very nicely within a containment area, G/C. Watch 32.16. If it takes that out, then it's going to be going down quite a bit. In the meantime, it's in a rectangle formation between a 34.37 THRM, up 92 cents, and it's kind of stuck between the candle of last week of 35.49 and the all-time high of 36.92. That's kind of the upper rectangle limit, and the low is the 32.50 to 32.15. If you look at the daily. The doji candle at a peak G at the top says, okay, you can pull back if THRM breaks 33, that's key support, then the candle of the 7th of April at round number 29. Yeah, well, why have I got? Wrong thing. Around 31.91. I'm going to get used to this. 31.39 is going to be key. That's that. So that's number one on the IBD top 50. Save. And we had a caller the other day wanted to go short. Was short, in fact. Not one of the weakest of the airlines. Save is, in fact, Spirit Airlines. Very, very good company. Cost-cutting company, but very good. I've been a number of times, not for a while. And made a high of 63.89 4 weeks ago, and it's still trading at 57.54. So it's in a trading range. My suspicion is that over a period of a couple of weeks, if it doesn't take out 60.50, in fact, it gets stuck here, it's going down. It's going to go down to the 55 to the 52 area. If you've got the next one, which is FB, some of you might remember this one. It's called Facebook. Facebook made a peak in the weekly at 72.59. Only a peak, a leg C, because the month is not finished. So this is a leg C in the monthly chart. Now, I was looking at this real closely over the weekend. Do we buy it? Do we not buy it? Is it worth a pop-up? I think it's starting to lag, and it's lagging for a reason. I think it needs some time before it can start leg D up in the monthly chart. That's my thinking right now, so we sort of avoided it. But in the meantime, it's in a trading range, trading at FBs at 59.97 up $1.46. The big resistance isn't the high of 63.18 made on the 10th. That was on Thursday. It is really the middle of the candle at 61.39. If it's able to do that this week, I'd say that's nice action. But 61.52 is the 9-period exponential moving average in the weekly. That's resistance. Weekly and MACD and stochastics still very weak. The daily is trying to attempt a rally, and so far this is it's an okay move. I'm not that impressed. If by the end of the day, Facebook closes over 60.70, I'll be much more impressed. So I'm watching it real closely. Why? Because in this counter trend rally that I'm calling it a counter trend rally right now, I'm suspicious of stocks that are failing to move. Today is their big move. They have one more day tomorrow. If they fail to move tomorrow as well, that's very negative. Let me just have a look at this. I had a quick question about my 2-minute chart. Yeah, this is a beautiful, folks, if you want to use the Chapman Wave methodology, you can use the cup peak D or E, and then you get a cup formation just off the 200-period moving average in the 2-minute E-mini, and then it went to a beautiful inside wedge, A to B to C. The way it spiked through the left side high is what I call the Chapman Wave cup and ladle formation. Chapman Wave cup, and is a powerful, this is one of the most powerful technical tools you could use. Why? Because it takes out the left side previous high, it smashes through, and it says it should go to at least a D. Well, it went to the D. It went to 1827.25. That was above the 1823, 1824.75 high this morning at, do I have everything? Yeah, 9:30 at 9:32. And then it pulls back, and now it's making a high-level cup and handle. And it says, yeah, I'm kind of a little bit stuck in this trading range, just made another cup with resistance, but each time the cups are shallower and the breakout is quicker. So this is going to be very important. A breakout above 1827.75 would be very positive. If it can't hold that, in fact, starts to pull back, my suspicion is going to test the 1823 level. We'll be watching this. I'm not trading it right this moment because I'm doing the show. So, okay, Facebook. Now, this is really interesting. Anika Therapeutics. This is a very interesting stock. It had the spiral to a leg F and then a peak F at 52.49. ANIK is the symbol at 39.40. And it had the same spike in the monthly chart to a peak F top. And then it just collapsed. Eventually, that wick, if there's any trading above 45.70, it's at 39.40 right now. Then it's going to try for the high. That's the only condition. Well, obviously, if it's going to go that high, it can go to the highs. But that isolated news-related open 44 round number, 52.49 high, and then close towards the low, and then all the activity is in the gap, says this is having a really tough time. It's holding well, considering, but it's not doing much. So this is another IBD stock that is not looking all that great. And then you get to something that's very interesting. MTW. Now, we had a caller on this, I believe, Manitowoc. I love saying that company. It's making a potential peak F at 32.80. We had a caller, I believe it was George from New York. We were looking at this chart, and the weekly is now at D. And this thing had a stupendous move. I know that we tried in my opening call. We had it at some point and got out a little early. Look at this. It went all the way to 32.80. Now it's making the arch formation, left side, right side price time match, which says that if it takes out 29.80, 29.50, there's a real good chance it's going to make a left side, right side price time match going to the 18th of April, and then you got to be careful because 28.87 is absolutely important support. 28.80 to 28.87. This goes all the way back to February of this year. Below that, and then it's going to start to go into the 27, 26 area. So far, it's acting well, but not great. After such a big, it needs a bit of a consolidation. Now we're going to go to cores. Hardly ever traded, followed it like crazy. Hardly ever been long or short cores. Was going to a short because I said the chances making a peak F double a hat trick up in the monthly chart because the weekly's already made 101.04 high. I just want to quickly check. Let me get this where I can read it. No round numbers, no round numbers, no round numbers, No round numbers. Oh, but died a silent doji. Okay, so this has that candle, the massive candle must have been news-related of the week of the 7th of February when it went from a low of 76 to a high of 94. That is a 30% move. That is huge. So it's giving some of that back. It's got the H pattern in the daily, the larger H pattern, a smaller H pattern, and it looks to me like the gap with the low of 76.15 and a high of 88.38, the middle of that gap, which is right there, 85, it's going to be absolutely key. A break of that, and you've got the 200-period moving average, 81 is the next level of support. I think that it's got a problem. I think cause is, in fact, trading 87.85, up 98 cents. I think it's got a bit of a problem. So now we're going to go to GMCR. We can just go down the list. I mean, I could do this all day. The GMCR, of course, Green Mountain, what do they call it now? They call it Green Monsters, Green Coffee Roasters, Green Mountain Coffee Roasters. Distributes coffees, teas, single cups, etc. Made a peak D in the week, in the monthly, a D in the weekly at 124.44. It had a 2-bar reversal. 124.42 was the high of the week of the 21st of Feb, and then 123.56 was the high of the week of the 28th of Feb. So this is going to lower lows and lower highs. You know, this is the strangest stock. It has this incredible surges, rocket ships to the upside, and then it gives it all back. Not all, but a big chunk of it back. And I suspect it's going down to the 88 to 86 level over a period of a month and a half, maybe 2 months. That would be my target. So I had another question. Apple. Would I look at Apple? Sure, I'd look at Apple. Apple, in fact, is sitting on the 200 period. You know, so many. One of the reasons why we wanted to go long in my opening call, a couple of sectors, is that I'm looking at the 200 period moving average being either almost touched, or just pierced, and now being hugged. And that says to me, this is the perfect time for some kind of a bounce, just a bounce, and it's a tradable bounce. I think why? Because at this particular point, my suspicion is that the downside is limited. Now, if you're in any of these crazy stocks that have had good news, etc., and they're spiraling to the upside, we have one that's up, just been up fantastically. We got it at 6.15, I think it was. It's trading at 7.17 right now. That's a great percentage move, especially in a market like this. That's just good technique, a good analysis. And luck. I mean, I don't know what you can do. Luck is involved, because in trying to time all these different stocks individually on the upside, when the market essentially the tide is turned to the downside, that's kind of tough to do. So a 200-period moving average on Apple says that if Apple breaks under 515, that's just really not good news at all. That's number one. Number two, the upside is limited to 526, and even today is only up 39 cents on a $520 stock, up 0.08. Not only that, the monthly chart has this symmetrical triangle, and I like to look at symmetrical triangles as saying that if you break the resistance trend line or the support trend line, then you go in that direction to the previous trough or the previous arch high.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman. I just wanted to check one thing here. I had a question about 2 stocks, F5 and Allergan, or Allergen. Oh, it was there. Okay, I knew that was there. Okay, good. So that's an instant restart, FB. That goes to a C and a D. So Allergen is holding really well. Allergan, is this in the biotech? It's one of those things where it could turn out to be an engineering company. Holding really nicely, making leg D in the daily, in the monthly. So that's not, the month is not finished at 120.04, 132.04. That's in your round numbers there. That's very good. And, is this one the semiconductors? Let me just double check here. Okay, I'll have to use that one. And I'm going to put in AGN, Allergan, and then just go click, and we find out multi-specialty healthcare company focused on discovering, developing and commercializing innovative pharmaceutical biologics and medical devices. All right, good. Yeah, there we are. This is one of those that's held the best, holding beautifully. Yes, if you're right. I think you're correct, Jane the Den. I think Jason wants to, I don't know if he's holding it long, but it is absolutely looking pretty darn good. So that's an E, an F, and I'm calling it a G for now in the weekly chart, and I'm also calling it in the daily chart, the bouncing leg A, the gray A, because it's decidedly under the last thing. Let me just do this. A, B, C, D, E, FG. Also, G in the day. It's funny, I noticed over the weekend, a number of stocks actually did Gs in 2 time frames, either weekly and monthly or daily and monthly. Very interesting. Yes, this is a nice counter trend. This is one of those. Go for the best of the best in counter trend bounces. That's really the rule that you should use. Out of the weak sectors, actually altogether, go for the best of the best. Okay, so Alligator looks like it was to tackle the candle of last week, back on the 4th, a week from Monday a week ago, at 127.11. So if it goes into, if it can hold in the 125.17 area, there's a good chance that it's going to test the high. But I'm not sure it's going to make an all-time high on this move. I think it's going to make an H pattern, lowercase h, and then fail. So that and FFIV, F5. And folks, I will be doing Larry's show, so I'll be looking at the currencies, the goals, etc. We'll do that in Larry's show. So peak F in F5 weekly, a counter trend rally in the monthly chart. Major thing was it made a peak D way back in 2011, or January, was it? January of 2011 at 145.76 trading at 108.66. Counter trend bounce. Could be a nice bounce. Could go a little further. 110, and it's 108.6. 110 to 111 would be very strong resistance. So I'm just treating these as good counter trend bounce material stocks in the by midweek. I think by Thursday we could, in fact, we might be heading down again. It just depends on the strength. Tomorrow is going to be a really important follow-through day. So let me give these, for those of you who are signing off and you're not listening to me for the next hour, when I do Larry's show, watch the volatility index trading at 16.34. Closed very strong on Friday, but didn't get up to 1808, which is the 200-period exponential moving average in the weekly. This bounce is very important. If later in the, if at any point the VIX goes to the 1533 or lower area, that will help sustain some counter trend. I'm calling it a counter trend move because the markets have gone to sell signal and sell mode in the dailies, sell signal to sell mode on Friday in many of the weekly charts. Be careful. This could fail at any point, but in the meantime, that volatility index is absolutely a clue. If it goes into the 15s, buying pressure will come in. Just make it as easy as that. So, yeah, there's the music. Folks, I will be back in another few minutes, maybe 7 minutes or something like that, to do Larry's show. Stay tuned, and if you can't, check out my service. It's the opening call, front page of TFNN. And I'll be back soon. Have a great day if you leave.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.